gentlemen, thank you very much for joining in. Kunal, let's start with the company first. You're a SaaS company and you're also indexed to e-commerce in India. So what exactly does the company do and who are your big clients? Because your growth is dependent on them.
Sure. Thank you, Reema, and thank you, Surabhi, for having us. Unicommerce is essentially a SaaS company. We sell software products to companies that sell their products online, either on their own website or the marketplaces, various marketplaces. We take care of the operations from a software standpoint, post the customer clicking the buy button. Everything that happens behind the scenes, where as it pertains to managing of warehouses, managing of inventory, figuring out which inventory should be listed on which marketplace, shipping tracking, payment reconciliation, various operations, the myriad operations that an e-commerce brand needs to conduct behind the scenes, we simplify it using software. So some of the leading brands, both digital native and digital migrant brands, are our customers, the likes of Mamaearth, Boat, Imami, Fab India, and we have 3,500 customers.
Okay. You've always said in your previous interaction with us that you've grown faster than the industry and eventually you would like your margins to rise to the EBITDA levels of other SaaS companies, which is typically 25 to 30%. So two questions. One, what is the industry growth rate? The next 3 years, 5 years.
Sure.
And secondly, how soon do you think you will be able to scale up your margins and hit that steady state?
Sure. Maybe if I take a step back, essentially Unicommerce is an index to the e-commerce volume growth because we make money on a per unit shipped basis, right? So on every unit shipped, we make a small amount of money. So today in India, there are 4 to 5 billion e-commerce shipments a year. Compared to that, China is at 150 billion e-commerce shipments this year. So 30 to 40 times that of India. Over a period of time, as India's e-commerce volumes grow, one would like to believe that given Unicommerce is an index to e-commerce volume growth, Unicommerce should also grow. Yeah. In terms of margins, this business has very high operating leverage. It has high gross margins. We don't do custom software. We sell software products. So the margins are in the 78 to 80% gross margins. And as a result, what we are seeing is as the revenues are growing, more and more percentage of that incremental revenue is going to the bottom line. So last year, about 50% of our revenue growth went to the EBITDA.
Kapil, if we could just, and I know you can't give too many forward-looking numbers right now, but just to understand the growth trajectory, between I think FY22 and 23, there was a significant bump up in growth, but then the subsequent year was more flattish. I think 90 went to about 100 CR. How do you map the trajectory going forward in terms of the opportunity, which seems to be very large? I mean, e-commerce is only booming in India, and also the competitive intensity. Who are the competitors in the market, and what should your investors expect from you, say, 2 years from now?
Sure. First of all, thanks for having me here. I think as Kunal mentioned, we are an index to the e-commerce. We have always delivered a growth which is faster than the market. The e-commerce market grew during the pandemic at 30-35%. We delivered nearly a 50% growth. Last year was probably the slowest year I have seen in the 9-year journey that I've been at Unicommerce for e-commerce growth overall. Where market probably grew at late single digits, we delivered a 15% growth.
So that would be maybe just the post-COVID impact, sort of a high base slowdown effect, right? I would assume.
As a company, besides the fact that the number of transactions continue to grow, we are seeing more and more brands are going online. So we will continue to add more customers. Plus, we keep on launching new products. We launched 2 new products last year, and we will continue to add geography. So there are multiple levers for us to grow as a company. So we are hopeful of continuing to be delivering a growth which is...
So you mentioned in COVID, you were growing at about 35%.
No, the market
was growing at 35%.
We delivered 50% revenue growth.
You delivered 50% during COVID. Right now, what is the pace of growth of the segment market? And what is the sustainable run rate industry-wide that you expect?
See, ultimately, e-commerce is a long-term story, right? We believe long-term, it will continue to give about 25% CAGR sort of a growth, e-commerce shipments. Sure. That's there in our RHP as well. It's there in the industry report. So there may be some soft years, like last year was soft year. Sure. Even to this year also, we are seeing there is slight recovery, but it's still too early for us to comment whether it's a long-term trend or not. But long-term, 5 years out, we believe that
25% CAGR is roughly sort of the trajectory for the segment as a whole, for the market as a whole. Got it.
What about the international business? 4% of your revenues today, you cater to Middle East and Southeast Asia. How much can you grow your international business?
So I think one of the key advantages of us having served a competitive market like India is that our product is kind of ready for these international markets. we continue to invest behind the international business. From a product perspective, the product is ready. All we have to do is take care of local integrations. We are obviously investing behind sales and marketing. So we'll continue to invest that. But we feel India, there's a lot of headroom for growth in India. A large portion of our business will continue to be driven by India. There's a lot to be done within India in terms of adding new customers, adding new products, and international will be one of the strategies.
Is there a mix you're looking at, India versus international?
So I think a large portion will come from India. International will continue to be one of the strategies, but a large portion of our growth and our contribution come from India.
Kunal, just a question. I think this the issue is about 276 odd crores at the higher end, right? And I believe this is pure OFS, so the money is not coming in the company.
Yep.
Do you foresee any cash needs? And inherently, I mean, is this a business that throws up a lot of cash? What are the cash levels? And would you require any funding down the line, immediately, say in the next 15 to 18 months?
So last year, our revenues, while you mentioned grew at 15%, our PAT doubled, right? And we are adding cash to our balance sheet every month right now. We already have a good amount of cash on the balance sheet, and the company has zero debt.
How much is the cash now?
70 crores as of end of FY24, but that's increased since then. So here's a company with zero debt, positive cash flows, generating free cash flow, already has cash. So we will first figure out how to deploy the cash we have effectively. Largely, we would look at inorganic opportunities with it, because we have no intention of starting to lose money as a company, right? When we've been profitable last many years, last 3 years we've been profitable. So effectively that money can be put to good use in finding good products that are synergistic with our current business.
30-second answer. Why are you going public? Because you don't need the money. Your fund is selling, SoftBank is selling. Why are you going public?
Our holding company is selling, but our fund is not selling. Firstly, we feel, as Mr. Murthy would always say, that Infosys went public and suddenly large enterprises started taking them very seriously. Secondly, our company is only because of the talent we have. Being public allows us to retain and attract good talent. And finally, for inorganic opportunities.
Okay, so branding, more visibility, and being out there on the large scale, the public market platform. Got it, gentlemen. Thanks very much. We look forward to more conversations.